The previous slides showed you one way to look at and analyze transactions. This is not how it's actually done, but it serves as a good learning tool. We're going to take a look at what's called double entry accounting. This system records the effect on the accounting equation of each transaction, and there will always be two accounts affected. The T account is a handy little graphic representation of an account. It shows increases and decreases in any account, and it helps when you're learning the dreaded debits and credits to be able to picture them in this manner. I still use T accounts when I'm trying to figure out a tricky problem. This slide shows a T account for cash. The dreaded debits and credits. Don't think of debits and credits as plus or minus. They are simply the left or right side of an account. Where the account falls on the accounting equation determines whether a debit is a plus or a minus, and the same for credits. Look at the equation. Assets are on the left, debits are on the left. For an asset, a debit is a plus, hence a credit is a minus. On the other side are liabilities, on the right side of the equation. So a credit is a plus and a debit is a minus. This takes some thought and some practice. There's a page in your course titled Mrs. H's Helpful Hints for Debits and Credits. It's worth looking at if you're struggling. For every debit, there will be a credit. This is a rule that cannot be broken. After the first couple of transactions, this shows the T accounts, the accounts in T account form, with the effect on each account. The stockholders' equity section of the equation is a little trickier than the other two sections. Revenues increase equity, while expenses decrease equity. This shows the expanded equation, listing the types of accounts and their links to the financial statements. And finally, the expanded equation with the rules for debits and credits.